From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 3rd, 2017. I hope you had a great holiday weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of trading this week, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. There are some key news events on the calendar this week, and you'll want to be sure to check when those events occur on your own financial calendars. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here with the USDCHF, the dollar franc. Look back to the top left-hand side of the chart where the black circle is. You can see that area where the market found a high, resistance high, right around the 1.0300 level, reversed and went back down, and that began a series of falls all the way down to the bottom of the chart. That's an important level there, right around 0.300, because going all the way back there, November 2015, we have not seen the market above, or really significantly above that level. We've seen it challenge and test, even some wicks pushing above there, but for the most part, the market has held underneath that resistance level. So what we're looking for this week is the market to change and break through there. The trend is up. The blue trend line shows us that on the right-hand side of the chart. The trend is up. That's the direction we continue to focus our efforts in. Let's go ahead and zoom it in a couple of times, see what's happening over the past couple of weeks. The red box, top right-hand corner of the chart between the purple and the blue shaded area shows us this period of congestion. Now, last week we did see some increased volatility because of low liquidity in the market. It dipped all the way down into the 1.0050s and then suddenly rallied and went back up, and we could see the market closing back inside the purple zone and opening back inside the purple zone here this week and staying inside that red box that you see up there under the blue zone above the purple zone. So all of that to be said, we're still in an uptrend, status quo. We're looking for the breakout in the direction of the trend above the blue zone. We don't want to be fooled into false breaks like it was here and here and here. We want a real break above 1.0300. For me, that's going to be an open and close above there to give me confidence that the trend is continuing. So within an uptrend, we buy support or breaks of resistance. Really, the next opportunities are either a dip back to the purple zone or a break above the blue zone here for the dollar franc. Take it down to the 4-hour time frame. Doesn't really change it, just gives you a little bit of a zoomed in view of what's been happening over the past couple of weeks. We were in congestion between the purple and the blue zone for quite a long time. We broke underneath it with some significant volatility, came back up, settled out around the orange zone. We opened up, gapped this up this week into the purple zone, and now we're all the way back up to the top resistance. Again, what we're looking for now, I think, for the trade setup this week will be the open and close above 1.0305 or so, the blue shaded area, to give us confidence in the continuation of the upside for the dollar franc. I don't see any significant reason yet to go short here on the dollar franc. Taking it on over to the euro dollar, exact opposite. Of course, we can study the trend, the black trend line. The blue circles show us these periods of time where the market spiked above the black trend line and reversed. We studied this late last week. Spike above the black trend line, reverse, came back down. Spike above, we can see it, each of the blue circles, even last week. Spike above the black trend line, came back down. So we can pretty much guess which direction we want to trade in, and that's still in the direction of the trend, the black trend line, and the pattern shows that we need to focus our attention in that direction. Eventually, maybe even looking for the breakdown of the last historic low into the 1.0300s and look for significant further lows down into the 101s, the orange shaded area at the very bottom of the chart. So we zoom this down to the 4-hour time frame. We can see what's been happening over the past couple of weeks. The congestion, similar to the dollar franc congestion between the yellow, orange, and blue shaded area. Today we're attempting to break down through this orange zone, but I need to be cautious. I need to wait for the right timing. I think we might even move this orange zone down just a touch. Let's pull it down to right about there. Let's say 103.90. If we can get it close to 90, that would be close enough. 103.90. We need a breakdown of 1.0390 if we're going to have confidence in the further push lower. We don't want a false breakout like what happened right here. This was a false breakout, turned around and went back up. So we don't want a false breakout. We want a confident breakout. For me, that's going to be an open and close underneath this orange zone. Or the next thing we're looking for, if it doesn't give us a confident open and close there, will be the breakout under the blue shaded area. And we'll study that blue shaded area into the mid 1.0300s a little bit deeper back in time later on in the live trade room. So if you want to see that, come back and join us in the live trade room. But breaking, I suppose one other thing could be the rally back to the yellow zone one more time. So yellow zone, under the orange zone, or under the blue zone. We're looking for shorts. No real reason to go long right now on the euro dollar. Take it over here to the GBP USD. We've seen some back and forth here on this currency pair as well. The rise of the blue trend line, the fall of the red trend line. This just taken on in. Zooming in here on the daily, you can see what's been happening here on this currency pair. We basically have been stuck between the orange zone and this purple shaded area down here. Let's pull that over. We've been stuck there. We are still within that area. So we see resistance at the orange zone. We see support at the purple zone. One of two things needs to happen. It either needs to break above the orange zone, sort of turn back into an uptrend, or break under the purple zone for the continuation of the downtrend. Right now, we're kind of just bouncing around. 1.2285 is the bottom in the orange zone. 1.2245 is the top of the purple zone, and we're just bouncing around there. If you're going to go short, the orange zone makes the most sense, or under the purple zone. If you're looking to go long, I think it would be an imperative to break above 1.2300, 2320, the orange shaded area, before you would even consider trading against the overall trend for the pound dollar. Moving over here to the USDCAD, couple of different trends to contend with here as well. The blue trend line is the longer term trend. You go all the way back to April of 2016 now, and you can see the blue trend line in place. It's had a couple of dips down into that blue trend line, but overall, I think long term, it's an uptrend. Short term, we've seen some push lower here. Let's go ahead and zoom in a couple of times here on the daily. Look at this blue zone. It's an important area. We studied it late last week, drawing in some indicators to show us how important this blue shaded area is. You look back here on the left where you see this blue circle and the supports into the blue zone. You see this black circle over here where you see resistance. You even see this black circle here on the right where you see resistance. So we know the blue zone's important. If you're looking to go short, it either needs to go back up to the green zone, like it did here inside the black box, to go short, or break under the blue zone. So if you're a short seller here on the dollar CAD, back at the green zone, or under the blue zone. On the other side, if you're looking for the return of the upside here for the dollar CAD, we're looking at the blue zone as support. Obviously, you can see that back here where the blue circle is here, where we hit on a lot of support and rallies back to the green zone. Or the next thing I suppose you're looking for would be the break above the green zone, targeting the yellow zone or higher. So at least at this point, we're right smack in the middle of the green and blue zone. No real opportunity until it challenges one of those areas. The further reversal, if you're looking for that, watch this green zone as a potential sell op, but I think your risk is pretty high still at this point above the yellow shaded area for the dollar CAD. Moving over to the USDJPY, it's an uptrend. That's the first thing I would say. We're in an uptrend. I think that's the direction you want to focus your efforts in here for the dollar yen. Zooming in a couple of times, you see the black box up here, purple, orange, blue, and even the green shaded area at the very top of the chart being incorporated within this period of congestion. Buying the blue zone obviously would have been the best opportunity in the direction of the trend. We're not there. We're all the way up here at the purple zone. 118.25 is the purple zone. We've seen challenges of it before. Look back here on the left. 1, 2, 3, 4, 5 days. Challenged the purple zone as resistance, couldn't break through it. So if we can break above 118.25, I think we look for a push towards the green zone, at least towards 119. Above there, we're into the 120s. Zoom it down to the 4-hour time frame. Again, we're studying that purple zone as the key point. We see on the left, no breakout above, no breakout above. These were false breakouts. We need an open and close above 118.25 before we have confidence that it's going to continue the uptrend here for the dollar yen. Moving on over to the AUD USD, I think this one's a very interesting currency pair as well. You look back to the left-hand side of the chart, the blue circle. Look at the congestion in there. If you were going to go short in the direction of the trend, where would you go short? Well, the yellow shaded area becomes your opportunity, or under the orange zone, which, by the way, back here, it never got under the orange shaded area at the blue circle. You look back here at the black circle, you see resistance again into the yellow shaded area. So the yellow zone's a pretty interesting area for us this week because because we've seen historical resistance around that yellow shaded area several times. I'm trying to move this black circle over. Resistance here, resistance at the blue circle. So we know that the yellow zone, 72.35, 72.60, is resistance. That's fact. It's not anything we can make up here. The orange zone is support. We can see that at the blue circle. That's fact. There's nothing we can make up here. So if we're going to trade the trend, which is currently down, we sell the yellow zone or a break of the orange zone. That's about as clear as we can make it here. Take it on down to the 4-hour time frame. So if you're looking to go short, let's zoom it in one time here on the AUD USD, you're looking to do that again in the direction of the trend, either at the yellow shaded area or under the orange shaded area. That's really all you're looking to do in the direction of the trend. All of that will change if it breaks above the yellow shaded area. I think if it gets above 72.50, 72.60, the top of the yellow zone, we're looking for it back into the 73s, back up here towards the purple zone or higher, maybe even all the way back up here to the blue shaded area. So again, we're in a period of congestion. I think you want to focus on shorts, selling the yellow zone or under the orange zone. That's the trend. Nothing really has changed. And again, history tells us that the orange zone is significant. We need a breakout underneath it if we're going to continue the downtrend for the AUD USD. Moving over to the NZD USD, New Zealand dollar, US dollar. Again, similar situation. We can see historical evidence around that orange shaded area. Look at the black circles, little tiny black circles. Support, 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 resistance on the left. So we know the orange shaded area right around 69,77,000 is significant. If we're going to go short, that makes the most sense. The next thing we look at is the green zone because that is where last week we found support. So if we're looking to go short, let's just go ahead and zoom it in here. If we're looking to go short, there's two reasons to do that. It either rallies back to the orange zone, which we've already seen the past couple of days, so that's not going to happen today likely, or it breaks underneath the green zone. That's what we're looking for. No challenges, no false breakouts. We want a real breakout, which would be an open and close underneath the 68.90 level, the bottom of the green shaded area. So selling this, going short, requires one of two things. It either rallies to the orange zone or breaks under the green zone. You don't want to go short sitting on top of support. You run the risk of it finding support and bouncing back up. So that's the first thing I would say. Now, what about going long? Because obviously it's had a difficult time breaking 68.90. I think you need to watch your fundamentals. Keep an eye on your news this week for any indication that either the New Zealand dollar is gaining strength, US dollar is losing strength. But right now, I don't think there's any indication either way on that. So some good news out of New Zealand or good news out of bad news out of the US would cause this to go back up. Or vice versa, bad news out of New Zealand, good news out of the U.S. would continue the downtrend for the New Zealand dollar. Take it on down to the 4 hours. Not really going to change much here on this currency pair, other than the fact that last week we saw a false breakout on the 4-hour time frame under the green zone. So we need to be confident. I will prefer to see the daily time frame break underneath there to give us higher confidence that it's going to continue the downside for the New Zealand dollar, but keeping an eye on the orange zone or under the green zone for our next trade opportunity on this currency pair this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.